Hey guys, Mike here. So it's definitely going to be an interesting week this week with a lot of stuff going on. And tomorrow is going to be kind of a weird day because the stock market will be open, the bond market will be closed, no economic data coming out, and then no earnings that will be coming out tomorrow that's going to affect the markets, right? But what do we got going on? And you guys have asked about this in the comments repeatedly. Israel said they're at war right now. Obviously, what we're seeing on the news is horrific. My heart goes out to them. Thoughts and prayers are with them. The biggest concern, of course, is this going to spread, right? Are other countries going to start striking them and taking advantage of this and all this stuff? And where does that leave us? Right? What are we going to do? And so again, war is a mess, and we'll just have to see what happens and stuff. So really, I hope this gets resolved and stops very soon. But again, it's kind of beyond my scope. I'm not Jewish or Palestinian. I do have friends that are Jewish that have tried to explain it to me, but it's hard, it's just hard for me to wrap my brain around because I've never lived there. I've never been there, and I hadn't had to live it like they have. So again, I hope, this stuff comes to an end soon. Again, how is it going to affect the markets? Your guess is good as mine. Put in the comments what you think. What does the market not like? Doesn't like uncertainty, okay? And so they want to use this to sell it down, or if this does spread and get worse, because you know what the mainstream media likes to do? They like to hype it up. So sometimes I don't know what to believe, to be honest with you. So, just keep all that in mind. Now, speaking of the markets, we're going to go through an interview with Dan Niles, a really quick interview, and why I think he did, and a lot of people did what they did, and that's kind of what you saw happen Friday and stuff. And then we're going to really take, a bigger picture and look at the markets, right? Because we're starting to enter a very positive seasonality time right here, okay? And I want to really just take a big view of, not just look at Friday, I just look at Thursday when we sold off, all that stuff. And so here's what Dan and his folks did. I believe it was really, this interview was Thursday, but they did this stuff on Wednesday.
It sounds like you were buying yesterday, right? Going net long.
Yeah, well, day before yesterday, we went ahead and covered most of our shorts. And our feeling was, if you could kind of go back through our posts, we thought oil was probably peaking out. We thought that would drive yields lower. And in that environment where you've gotten such oversold conditions in different sectors, not all of them, we thought that was a good opportunity. And so one of the sectors that actually we really went and bought a lot of was the Russell 2000 type stocks. And those were down 22% last year, down another 2% year to date this year. And they don't have the same kind of dollar exposure that the S&P 500 has or the Magnificent Seven. And so that's kind of what we're, investing in going into earnings season. But, we're short-term bullish, but make no mistake, we're long-term bearish because of, the three bears that we see on the horizon. And that's how we're viewing things.
Okay, but just first on the short-term call, since you are willing to put it out there, you were right on the oil call, seeing a steep drop there, but not so much on stocks and bonds, which are not rallying.
Well, the stocks and bonds, you got to remember, they're chopping around right now. So for us, the big thing, and we've talked about this before, I wake up in the morning, first thing I look at is oil, because that seeps into all sorts of different things. So the food you get at your grocery store, that's got to be shipped there. Built materials, a lot of that's created with energy or oil, plastics, etc. So it seeps into a lot of different things. And oil's now gone from mid-90s, and we put out a post on this, and now it's down to the mid-80s. And so that's going to take a lot of pressure off. The bigger concern we have is actually the dollar, which is that's gone up about 7% since mid-July, which is when most of these companies guided. And if you look at that, you've got 20% of the Russell is outside the U.S. in terms of revenues, but that goes to about 30% of the S&P 500.
And the reason why you saw like a big bounce on Friday, you saw a lot of people covering shorts. I reported that like probably Monday or something, that I saw this coming this way because people were reporting it. This was a month ago. This is September 7th. Look at what the percentage of the sector and index members were above their 50-day moving average, right? And so tech at 53%, energy's at 91%. NASDAQ 100 sitting at 47, so it's pretty high, right? Not bad at all. And then you look over here. This was October 5th, so a month later, and look how far this had dropped, especially energy. Look at energy. went from 91 down to 4%, but it's just a mess, right? I mean, this is super, super bearish, right? Where all these sectors and these stocks are dropping below their 50-day moving average. Again, I get surprised by this. I get to track this every day for the members, and so you can see it coming, right? And then, again, here it is, and this is what he was talking about, the Magnificent Seven, things like that, but it's just so skewed. I mean, look, if you want to know where the money's at, this picture right here ought to tell you. I mean, this is year-to-date and month-to-date. And you just look, the only thing that's positive, communication services, tech. Everything else is either you got consumer discretionary is positive for the year, negative for the month, and you're going down the line, and there ain't much love at all for any of these sectors right here. I mean, I'm talking about year-to-date or month-to-date. They're either just flat or down. And so you can see where all that money keeps piling in, and that's why the Magnificent Seven, which we'll look at today, it has to continue to ride on up, or this market doesn't go. It really don't matter what's going on with the rest of these stocks. We just got to see they're going to keep piling and piling more money into what is assumed basically 10 stocks that have basically lifted this, market and stuff. And that's what we got to find out. So let me know what you think in the comments now. And guys, before we continue, please hit that like button. It helps people find the video. I really appreciate that. And if you like this kind of content, think about hitting that subscribe button down at the bottom. This is where we're at right now in seasonality. Okay, so far this has played out pretty decent. And here's October, about where we're at now. You could see maybe one more sell down, but once you get like usually the 15th, 23rd October forward, that's when things start to look up and everything in the market. I know we got a lot of stuff going on. And then when you look right here at the key level, especially the S&P 500, like 43.26, which is where we're getting back up to, right? Break above that, fill that gap, then you start moving. You see it got back in this channel. So far it's defended the year-to-date anchor VWAP, the 200 moving average. And we move to the Qs, you can see a lot of resistance coming up. You're going to have your 50 moving average. You're going to have that trend line, which goes back to October. Then you're going to have this resistance line was support. Now there's resistance going across right here. It's sitting at the 100 where it got rejected. So you kind of got all this stuff in one area. And so if it can push through all that, that is super bullish. If not, though, it is a great spot to see a rejection, right? This is normally what you would see. And then when we add on the daily here, the RSI, you see it peaked right above that 50. The MACD got a bullish cross. It's still below the zero line though, okay? When this gets back above the zero line, that's when you're going to see a big pop in the index. But again, that's a bullish MACD cross below, and then it come across the zero line, and you got a nice move up, right? And that's usually what you're going to see. So we could chop sideways. Again, that ascending trend line is going to be key with all the confluence in that area. When you look out on the weekly, though, you can see, it looks like the momentum's trying to curve back up. You see it on the histogram. You see it on the RSI. Again, this is a bigger picture. So you could just trade sideways right here, or we could start to move up. Now, IWM has been a hot mess. You can see it got down, it went all the way down to that demand area down there where it bounced, right? And then it consolidated and then moved back up. Add this trend liner here coming down. That's going to end up being resistance. And then we move over here, you can see, I mean, the 50's just turned all the way over. It's crossed the 100. So again, momentum is really, really pushing down this. You can see all the resistance it's going to have to get through. Now, if it gets right through all this and it gets right up there to 178, we're going to pop to 185 real quick. We get above 185, we're going to pop to 195 real quick. This is the way the IWM trades. That's just the way it is, okay? So keep that in mind. Now, what is all it's going to depend on? The dollar. For the first time in 12 weeks, it got a red candle. So 11 straight green weeks. And you can see, just look over here to the left, this is a weekly chart. Usually when you get one red, it starts to have multiple reds, starts to fade down a little bit. So we'll have to see on that. Now, Tesla, again, got some news out today, which I'll go over in a minute. We'll see if this rising channel continues to play out, rising wedge, whatever you look at it as. And again, when you look at it, you can look at it that way, or you can look at it, it's almost in this pennant right here. And so, it could just consolidate into that one for busting out into the big one right there. But the news that came out was Tesla's Chinese-made EV sales volume falls 10.9% year over year. And then you look at this right here, it sold 74,000 cars in September, a 10.9% decrease from a year earlier. Sales of Chinese Model 3 and Y cars were down 12% from a month earlier. And so we'll see how the market wants to deal with this, right? You got that, and then of course on top of that stuff going on in Israel. So we'll have to see how it wants to react to it. Now NVIDIA, this one right here, this is a weekly chart. What do you see? You're gonna see a lot of these look the same thing, with the histograms turning up, the RSIs turning up on the weekly. Again, the air is really, really thin up here because that's the all-time high right up there. And so again, this one is just it's amazing how they keep piling into this one, but strength is strength, and they love playing this AI play. Now remember, I tell you, you can get whatever you want out of a chart, right? So this is a rising wedge right here. So it declined into it, it's rising back up. Normally you see a breakdown on this, or if you want to go bullish on this, you got this pennant right here, right? That it broke out of. That is a bullish pennant, right? And so either way, let me know in the comments which way you think this thing is going, because big money continues to pile into it. AMD, we saw this breakout. Again, you'll see a lot of charts like this as well, where they're sitting there coming into this major trend line, right, which was support, now turn resistance. And if you put the moving average in there, well, I didn't. Again, those are going to be resistance as well. 110 is a brutal area of resistance for this. But you can see, you got your MACD crossing, the RSI is over the 50, and if it can get or manage to get above that 110 area right there, and this is a weekly chart right here, which you can see. Again, what do you see? The histogram, the MACD, and everything trying to do is trying to turn back up, get the momentum shifted back up. And if it can break through that 110, 111 area, it's going to end up going probably 125, and then past 125, it's going to be 155. And so this one, and when you look at that, I mean, it doesn't look bearish when you look at it, but you see it on a lot of these charts. What do we see with Meta? Nice breakout, had a pennant which it broke out of, and then you're sitting here, there's the MACD. There's your RSI. The momentum's trying to curl back up. This is definitely a bullish name, which a lot of people are in. This is one of the few where you can see like the 50 didn't curl over and start turning down. It went flat, while the 100 and 200 are still pointing upwards, so which is good as momentum. And then we look at this. I'm going to add this trend line in here. We'll get a third hit probably this week. I'm going to see if it gets rejected or not, or actually breaks through, which would be super bullish for it. So at 325, it breaks through 325. Remember, this is going to be thin air, guys. That's the all-time high up there. So a lot of people expect, this is going to break through. So when you look at the fundamentals, which, I mean, it's not like that's what's driving this market. But again, when you look at its fundamentals compared to some of the other Magnificent Seven, that people tend to like this a little more. So that's why as you see that huge rise up right there, which is just crazy still. When I look at that on the chart, that is a crazy move up from October. But again, we'll see if this breaks above that or not. And then when it comes to Apple, this trend line goes all the way back to 2003 right here. We can see we've had multiple bounces right there. And if you look, I mean, if it would have came down, if hit that, you would have seen it go down to like 165, which is why I was picking that number. It wasn't just made up. And that would have obviously filled that gap right there, got us down to that main trend line, which you see, which it did not make it. So again, they wouldn't even let it fill this gap right here. So if this continues to move up, this is a bullish formation right here, you would fill that gap right there and then break out. Another way to look at this is it's doing the same as the rest of them are doing, right, on the weekly. The RSI is trying to curl back up. See the histogram pulling back up. So the MACD is trying to turn back up with more momentum to it. And again, it's Apple. It gets treated different than any other stock, as we have got to see. As other stocks have been pummeled, it has not really. Now, Microsoft, very quietly here, you can see it's not even that far from the all-time highs. Like if it breaks above 327, I mean, it's going to fill that gap. And it's going to get up there to, what is it, 350, 351 is the all-time high. So it's not that far at all. And you can see the same thing on the weekly MACD and the RSI. Same thing as the rest of these stocks have done. So watch that level right there, 327, 328, I believe it is. And again, there's the momentum trying to shift back up. It may take a week or two. We'll have to see. Now, when it comes to earnings, nothing to worry about tomorrow. Tuesday, PepsiCo is going to report. We'll see if they're still raising their prices and able to pass it on. Thursday, you're going to have Delta, Domino's, Fastenal, probably going to be the three most popular to see right there. And then Friday, this is when we get to the real earnings, guys. JP Morgan, going to have United Healthcare, Citi, BlackRock, Wells Fargo, Progressive, PNC, so loaded with earnings on Friday. And again, the banks have been a hot mess right now, so we can't wait to hear from them what they got to say, because it's not like interest rates are going down. Now, to look what we're up against here, this is what I mean by earnings season starting. I mean, you're going to have a boatload of earnings every day. The big names, the most popular high beta names are going to be coming out. So again, it's going to be a super, super, super volatile time coming here in October. That's why I said October is iffy. You just don't know, and people don't know what to expect because I'll talk about in a minute about the dollar and things like that and how it's going to affect earnings. Then when it comes to economic data, obviously on the 9th there, which is Monday, again, nothing but Fed speakers, so no economic data. The next day, MFIB Business Optimism Index will be coming out. You come on down here, you got a bunch of Fed speakers once again coming out running their mouth. Then you're going to end up with a bunch of economic stuff on the mortgages, but the big one is core PPI month over month. Core PPI year over year, PPI month over month, PPI year over year. More Fed speakers coming out. I just can't believe that's happening. Then you'll have FOMC minutes. And then on the 12th right here, that's when we're going to have continuous jobless claims. Then core inflation rate month over month, year over year, which they're expecting to decrease. Then CPI. And then inflation rate month over month, which they're expecting 0.3%. So a decrease in inflation rate year over year. They're expecting to go from 3.7, 3.6. Then we'll get initial jobless claims and then a bunch of old data if you like to hear about that kind of stuff. Then on Friday the 13th, oh, that's going to be a fun one, right? You'll have a couple Fed speakers, Michigan consumer sentiment and everything coming out. But again, nothing that should affect us tomorrow as far as economic news. And the earnings are going to be interesting just because, again, you got all these headwinds in all these different countries because what's the stock market? It's really just those 10 stocks that have just continued to push it up, right? So it's their earnings that are going to be the ones that people are going to be looking at and saying, okay, well, their earnings, over half of it comes from overseas. So when they're converting it back into US dollars because the dollar's been running up, they're going to get to keep less of it, unlike they did in the first and second quarter. Plus, you got countries in Europe that are considered to be in a recession. Obviously, China. I mean, who knows what their data is going to be doing or who knows what to believe on that. But we see, there is a slowdown there, right? Because the real estate market is a hot, hot mess. And their people are more big on saving than actually spending. And so, it's going to be fun times to see. So that's why I was saying October is the most volatile month, right? September's the worst. October's the most volatile with the biggest swings and stuff. So we should have to keep that in mind. And again, that's why Dan and I was talking about how they're investing in the Russell because most of their earnings are here in America and stuff, and they're just so beat down at this point in time versus the other stocks are just way up, way up. And the question is, how high would they push them? That's going to be the big question. Everybody's kind of pondering stuff, and more importantly, the guidance going into the next quarter, right? What are they seeing going into fourth quarter or even 2024? It's going to make for some interesting times. I mean, who is going to be going out buying those $3,500 goggles or whatever glasses they call them from Apple? Are you going to be buying them? I don't know. It's a good question, right? So that's the kind of stuff people are looking at. So anyway, let me know what you think down in the comments, what your predictions are and everything. Appreciate you guys watching the video. Please hit that like and subscribe button as always. If you're enjoying the membership, get a 7-day free trial. Hit it down there in the description. Less than a McDonald's combo. And you'll see what all we got to offer. So anyway, hope you guys have a good rest of your Sunday. And I'll see you tomorrow.